All right, so got a little bit of a smaller group today, but what we're going to talk about is the fastest way to pass a funded account and kind of like the system and the tools that we use here at Push Button Trading to pass evaluations. And we'll talk more about that here in a few minutes. But first, this presentation is for educational purposes only and does not constitute financial advice. Trading involves significant risk and is not suitable for all investors. The decisions you make and the actions you take in your trading are solely your responsibility. Past performance is not indicative of future results. Understand and acknowledge these risks before participating. So, all that to say, only trade capital you can afford to lose, right? So, who am I? My name is Matt DeLong. I've been a stock and options trader for about a decade, and I've been using automation stocks, futures automation for about 7 years. I was a former CTO of another trading education company for 4 years, and I've been a speaker with the Money Show for 5 years. So I've been to Dallas, Vegas, Orlando, all over the U.S. speaking for the Money Show, talking about automation and trading bots. So let's talk about what we're going to go over today. Again, the topic is the fastest way to pass a funded account. So, of course, there's the mental piece we'll talk about, and then knowing some of the rules that you need to have and be familiar with, as well as how you can stack some accounts and not just go all in. We'll talk about some basic logic for how to do that, how to approach that, how to think about it. And then we'll talk about some of the size for risk. So, what is conservative, what's considered aggressive, how all that works. So, I'm curious for those of you here, how many of you can throw in the chat pane there. What funded account programs are you familiar with? Like, what have you used? What are you familiar with? What have you heard of? Go ahead and drop the name into the chat pane. So we're talking today about futures trading. So futures prop accounts. So things like Lucid trading, the big daddy would be Apex. There's dozens and dozens of them out there. Let's see what people are writing about. So Top Step, Tradeify. Okay. Yep. Heard of all of those. Yep. Awesome. So I wanted to I wanted to ask you guys, have you ever thought about this? But trading is actually pretty easy, right? How many of you guys would agree that trading is easy? You're like, Matt, I think you're a little screw loose here. Trading is easy, as you guys probably know. Like putting an order, it's pretty simple. It's not hard. But making money, right? That's a little hard, a little bit more difficult, the making money part, right? So part of part of what we're going to do is we're going to talk about like how we can think through this, how we can do some things a little bit differently. And oops, that's cutting out my screen. The gap between knowing and execution is what we're gonna talk about here today. So the thing that I always find interesting is when someone says, "Hey, I want to learn trading and I need to make X amount per day, per week, per month," right? Like someone told me the other day, they want to learn trading and they want to make six figures every month while they're learning. I'm like, that's great. You can do that, but the odds of you actually doing that are kind of like hitting the lottery on your to make six figures when you're first learning, right? I mean, think about that. What we like to think about is you can control the inputs or the outputs, but you can't control both. Meaning, I'm going to do whatever it takes to make whatever money I need, or I'm going to put in the practice and put in the kind of master the process, and whatever happens, happens, right? So it's the equivalent of just saying I want to work at McDonald's and I want $100 an hour. Like you can work at McDonald's and get whatever they pay, or you can find a job that pays you $100 an hour. You can't pick both. And so that's one of the big things that we see people do when they start working in trading is they want to just like, I need this and this. It's like, if any of you guys have ever been hunting or fishing, there's plenty of times where you can go out and actually come home empty-handed, right? Like I have to do this and this has to be the output or the outcome is kind of a silly thing, but lots and lots of people do that. It's quite interesting to watch people kind of have this eye-opening experience of you can't really control the inputs and the outputs, right? So what are the things you can control? Well, you can't control your entries, right? You can control your stop losses, like where you put those, your risk, your rules, discipline. You can control all that. What is the one thing you don't control, like directly? You don't really control your wins, your losses, the profit, whether or not you pass an evaluation. You don't have direct, you have indirect control over that. You don't have direct control over that, right? And so, kind of what we're going to talk about is we're going to talk about like this idea of splitting decisions and outcomes. So, I'm curious if I was to ask any of you, what is your best decision you've ever made? What is the best decision you've ever made? Most people would answer something to the effect of something that had a good outcome, right? So, let's talk through this for a sec. Imagine I buy a lottery ticket and I win the lottery. Was that a good or bad decision? Was that a smart decision? Was that just dumb luck? Like, do you guys understand what I'm asking? So the idea here is if the outcome is good, that doesn't mean the decision was good. And what we're talking about here is actually based on a book called Thinking in Bets by Annie Duke. And the idea here is we need to split our decision making from the outcome. What do I mean by that? Well, there's four different like categories here. There's you can make a good decision and just have a bad outcome. Like you can put on a good trade and it just loses. Or you can put on a good trade and it wins. Obviously, that's pretty self-explanatory. But you can also make a very foolish choice and have a bad outcome. Again, somewhat predictable. Bad decisions aren't always obvious immediately on day one. But then this is the part where most people get a little bit, we'll say they get a little bit stuck or a little bit overly, what's the word? They get in trouble if they do something crazy and risky and it works. Because what is the next logical step? I need to 10x that. I need to 5x that crazy wild step. And I've seen this happen. I've seen people have huge risky trades at work and then they want to scale from that and then everything blows up. They lose all their profits and then some, and then they're depressed. Like literally, I've seen this happen so many times, right? So what I want you guys to think about is don't think about I need X outcome. Think about what is a good decision that helps improve my odds of whatever that outcome is, whether it's being profitable, whether that is getting a funded account passed, whether you're working towards payouts. Does that make sense? So most people have never really shared, kind of pulled back the curtain and kind of walked you through some of this. And I'm pretty sure this might be new information for some of you guys, but I am curious how many of you again been trading, like how long you've been trading, because most people when they very first start, they immediately go to, oh, I want to, they think about the exotic locations they want to travel to, or, the fancy car, or the fancy house, or all the things, right? And they don't quite understand that there's a lot to learn before you get to any or all of that, right? So imagine taking your very first golf lesson and you ask the golf pro teaching you, hey bro, how long before I become Tiger Woods? And I know it sounds ridiculous, but you'd be surprised how often in the trading business that happens. How long before I make money, right? It's like you have a lot to learn before we get to that stage, right? So the idea here is think in terms of decisions versus outcome. Two different like the decision versus the result. Two very, very different things. You can control the decision. You don't always directly control the result. And so part of what we like to do here is we like to stay in this top half. We're going to start making smart decisions, calculated decisions, and sometimes calculated decisions like high probability trades. Sometimes they just don't work, and that's okay, right? That's okay. But I'd rather have 100 of these versus 100 of these, because this is going to enforce very, very, very bad habits down here at the bottom. This is going to cause me to want to 10x everything I'm doing, even if it's ridiculous and foolish, right? Think about it. If I won the lottery and the very first lottery ticket I ever buy, would I ever be tempted to buy more lottery tickets? And the answer is absolutely. I'm like, well, I got this. You just buy it and it automatically wins, right? That it's easy to kind of fall into those mental traps. So here's what I'm going to do is we're going to talk about the rules you need to know. So in this example, throughout this whole entire discussion, we're going to be talking about a 50K, and we're going to talk about Lucid, one of my favorites, which, by the way, I got another account funded today with Lucid. Pretty fun. Oops, so 50K Lucid account. Now, for those of you who mentioned you're familiar with Lucid, they do have some rules we'll talk about here in a sec. But there are some things you need to know about funded accounts. One is, what is the profit target? Like, what is your goal that you have to hit in order to pass and get funded, right? So we're going to be talking exclusively about $50,000 accounts. Now, a $50,000 account does require a $3,000 goal, right? A $3,000 profit target. So it basically means, hey, follow the rules, grow the account from 50,000 to 53,000. Okay. Now, the other rule is there's something called trailing drawdown, which means as I grow in profit, how much I'm allowed to lose also grows. And most of these allow for a decent amount, but in this case, our 50K account with Lucid allows for a $2,000 drawdown. Now, why am I saying all this? Well, even Lucid themselves has 3 different account types with 3 different kinds of rules, right? And a lot of them have anywhere from 25,000 all the way up to maybe 150,000. I actually have some older accounts with other prop firms that still are $300,000, like actual funded PA accounts, 300,000 that I still myself use and have. But today, most groups offer between 25 and 150,000. Those are the account sizes that you're able to get today. Okay. Now, some of us who've been around a few years or decade plus, we have access to older accounts that when they offered, were a little more lenient and had bigger account sizes that they offered. And those are like legacy accounts that some of us still have. Does that make sense? So the other rule that you need to know besides the drawdown is like a daily loss limit. So what this means is I'm allowed to lose $2,000 overall total, but I can't lose more than $1,000 in a single day. Now, why does that matter? Well, as those of you who know or familiar with funded accounts, you have to grow that account. If you break the rules or lose more than you're allowed, you have to pay for another account and start all over, right? It's like you get to go back to zero, back to square one, essentially. And so the reason that this is super important is because we are one of the only companies that offer technology to help you pass funded accounts and do it specifically for the funded account program. So you have things like you have to be in cash at the end of the day, right? And you have certain kind of rigid risk parameters you have to follow. So those are very, very specific things. You can't just go buy a trading bot that's made for a cash account and put it on a fund account. It's just not going to work because there's very, very, very specific rules that apply to funded accounts and nowhere else, that you have to be able, like parameters you have to be able to know about and stay within. Okay. So what we like to do is we don't like to think of a bot or a strategy. I don't like to think anymore as far as a single strategy. What I like to think about is kind of like a portfolio, like multiple bots that work in different environments. So something like a trending market, right? So when things are just trending up or trending down, that's one example of a specific market. A ranging market is kind of like where things are just kind of going sideways, up and down, up and down, up and down. And what's interesting is the strategies that work in this market automatically lose in this market, right? And what am I saying? Well, what I'm saying is there's no one size fits all strategy. Most people are looking for the holy grail, the one strategy that works in every single environment, and that just doesn't happen. It's the equivalent of trying to wear a t-shirt in the summer or wearing a long sleeve coat or a heavy coat in the summer. Sorry, a long sleeve, a heavy coat in the summer or a short sleeve t-shirt in the winter, right? Like there's no one size fits all. There's different environments that call for different tools, right? And so what we're trying to do is trying to explain that our technology is really, we have this diversified portfolio. A portfolio is basically multiple training bots running in a single account, working towards getting an account funded or working towards getting a payout. And so what we do is we actually have all these different conditions. We have, I think we're up to 549 strategies right now. 549 plus and counting. Every month we release some new ones. But it's basically, imagine taking 549 strategies and you're reaching into a bucket of 549. You're grabbing some of them, just 8 or 9, and you're saying, hey, I want to look at how well these play together. And we actually have tools that we'll demo for you here in just a few minutes that show you how all this works, okay? So let's talk about the rules specifically. Let me lay this out for you for a 50K account. We'll take a look at what are the specific things you have to know and how do we get these accounts funded quickly, okay? Now, the profit goal is $3,000 here. Your trailing drawdown is 2,000, and what we just said again in a few slides ago was our daily loss limit of $1,000. Okay, so these are the main numbers we need to know for a 50K account, and I'm pretty sure most of them have very, very similar, whether it's Lucid or Blue Ski, or there's dozens of them out there. And people ask, does it work with this account? Does it work with that account? At the end of the day, if it works with NinjaTrader, then it will work with our tools. I've been made aware recently that Top Step does not support NinjaTrader anymore. They used to years ago, but they no longer support NinjaTrader. They have their own like custom platform that they built. So they don't work with NinjaTrader, so our technology can't work with them. Now, that's fine if you have existing accounts. It's just that account can't work with this. You can always, go get another account pretty easily with one of the other companies that does work with NinjaTrader. Okay. So let's talk about the two different ways of thinking about this is how do I get an account funded? There's really two ways to do this is you can be very, very conservative here, or you can be very, very aggressive over here. What do I mean? Well, all of our technology is built so that you can it's kind of risk per trade, right? So it's risk per trade. How much do you want to risk? Oh, right here, risk per trade, right? So I can say anywhere from maybe $100 to $250 is what I want to risk per trade. And that would be considered conservative. Okay. Now, if I want to get super aggressive, everyone's like, yeah, let's go big or go home. You can risk maybe $500 to maybe $1,000 per trade. And that would be considered very, very aggressive. Now, why is that very aggressive? Well, I'm only allowed to lose $1,000 in a single day. So what does that mean? Well, that just means that I'm allowed 2 trades and then the account blows up. If 2 trades lose, I'm done. I got to start all over. Okay. Right. So that's the problem with being a little bit too aggressive. Now, being too conservative means it's going to take a little bit of time. Right. I'll show you the stats for the account I just got funded today. It looks like it took 19 trading days is what it says. 19 trading days. So 19 trading days, and today pushed it over so I went from trying to say 50. So here's I went from 50,000. This is my balance as of today, literally 19 trading days. So what is that? About a month, something like that. So I want to show you guys, it's not always like random. There is some logic to this. It's not like you're just, hey, you decide how long you want it to take and it just takes that long. As you guys know, there's a process to this. Okay. So what I want to show you, let me switch here real quick, is we're going to talk about this idea of knowing what your odds are before you purchase a funded account. Now, how many of you guys have ever seen a funded account simulator that literally shows you, here's what you're running, that'll show you how well it will do in a funded account? And I'm talking about like a screen, like stats, software tools that show you something like this, like a pass rate of 95%, which means if I had 100 accounts, I would have passed 95 out of the 100 times. And my average days to pass being like 18 days in this example. This is Lucid, and we're using conservative risk. That's why I was using $100 to $250 of risk. Does that make sense? Have you guys ever seen this before, where we're literally like building a portfolio? We're looking at the simulator to see how well would it have worked. Right now, most of you like, I want to go as fast as possible if I blow up a well. Well, keep in mind those things are like at polar opposites as far as aggression, being aggressive, and being conservative. How long it takes and how quickly you can get an account funded. So let's talk about it. Let's think about it in a different way. Is high risk, high reward. So a low pass rate, basically like that $500 to $1,000 of risk. If we're risking that amount here, then we can have a very low pass rate, but we can get accounts funded. And most prop firms have a minimum number of days. Some of them are 3 days, some of them are 5 days. Some of them just have 1 day, which is obviously you can't trade 0 days. You have to have at least 1 trading day to get funded. But usually maybe 3 to 5 days of trading is common. So you can't go too fast, right? And then there's some like Apex, which if you take longer than 30 days, you have to start all over. So they kind of encourage a little bit of a kind of YOLO type trading. You only live once, put it all on and see what happens, all the risk and see what happens. But again, this is the idea, is you have these trade-offs, right, between high risk, high reward, and then the pass rate is lower. And I'll show you the tools here in a sec. But keep in mind that being aggressive or having aggressive risk is a sprint. If you get aggressive, you have to be able to afford to lose the race. This is the equivalent of a Hail Mary in like the NFL, right? Like you're down, 3 or 4 points, and you got a minute left on the clock, and you have to do something. Something big has to happen, and you take a high risk. It could get intercepted. A lot of things can happen. So this is the idea with a trade-off of high risk, high reward, is it has a low pass rate. Now, the opposite side of that, where I prefer to go, because I don't have any time limits, I don't use funded accounts anymore that have a 30-day requirement, is you have to be done in 30 days, or you have to pay again and start all over. That's just demoralizing. It's kind of nutty. But in this case, you'll see that this is conservative, and this has a very high pass rate, meaning that if I tried 100 funded accounts, I would probably get 90% plus actually funded, but it might take a little bit longer. Does that make sense? So again, the higher pass rate, people are like, how quickly can I get funded? And you can automatically tell they want fast and furious. They want the aggressive approach, which is fine. You have to be aware of the trade-off, right? And so that slow and steady kind of approach, and it is sometimes, it can be boring, but it is the approach that works the best. So what I want to do, ladies and gentlemen, is I'm going to go ahead and pause my screen. I'm going to switch over to our software. And by the way, we do offer a free trial of the software I'll be showing you. If any of you guys are interested, we have a free trial. We'll go ahead and throw out the link here in a second, so you guys can take a look at it and download it and play around with it if you want. Now, what I'm going to do is I'm going to go ahead and share, and you'll see here I am now in the portfolio, push button portfolio software tool. In the background, you'll see NinjaTrader, and this is basically a software tool that our team has built. And let me maximize this real quick. And this is showing a bunch of different portfolios. Now, keep in mind, what does that say? It's a little blurry. Does that say
550.
Okay, thank you, Chase. 550. So we went from 549. So the idea here is that we have 550 different combinations, different strategies. And I'm curious if anyone has thought about 550 total, and you can mix and match them any ways you want. How many possible total combinations do you guys think there are? 550, it's more than 550 because you can mix and match, right? And you can go up to as many as you want. Obviously, the funded account programs have their own rules for maximum contract size, maximum drawdown. So there are some limits on things you need to think about. You don't just turn everything on and just go for broke. What do you guys think is the maximum possible combinations? How many possible combinations do you think there are? While you guys are thinking about that, I want to show you kind of how this tool works. And we're going to talk about the portfolio generator. And what we offer right now for a 14-day free trial is not the actual trading bots themselves, but what we offer is the builder and the analyzer. We offer these two things and the market pulse. These are the tools that we let you use for free. So you don't get access to the bots. We've had way too many people try to use the bots to get accounts funded. And they're like, if I get funded, only and if I get funded will I pay and join. But that's kind of like the equivalent of saying, I only want to pay for a lottery ticket only if it's a winning ticket. It's like, there's a lot of work that goes into like helping people get stuff set up and answering questions and all that. Maybe I get paid, maybe I don't get paid, right, for the technology that we've built. So here's what I'm going to show you. Okay. On the left here, this panel has some portfolio settings. And this is what we're going to do. We're going to build a couple different portfolios here in our session today. And what I did was I said to have a $50,000 account, and our maximum drawdown, you guys remember, is $2,000. These are the rules that are set by the funded account program. Okay. I'm going to say I want a monthly target of $1,000 for minimum strategies and 10 maximum strategies. So anywhere between 4 and 10. So reach into that bucket of 550, grab somewhere between 4 and 10, no more, no less. And let's see what happens here. And then I can say I want anywhere from $100 to $250 of risk. Oops, $150 to $250 of risk, and generate a portfolio. Now, as you can imagine, there are hundreds of trillions of possible combinations. We'll just say millions and millions of possible combinations for a portfolio. And so the way that this works is the system is looking at all the possible combinations of those 550 that meet your criteria and your search criteria and your parameters that we just defined. So what were those parameters? $2,000 of drawdown, anywhere between 4 and 10 combined strategies in a single account, as well as making sure that there's no conflicts. So you guys probably know you can't go long and short the same asset at the same time in the same account, right? And so what you'll see here is this generated some kind of internal scoring, and it says these meet all of our criteria, meet all, right? What were our criteria? Well, if you remember, we defined our criteria up here, and it was basically $100 to $250. This is conservative. $100 to $250 of risk per trade, and we have maximum of $2,000 of drawdown, right? That's kind of what it built for us. And then here are, again, there's hundreds of millions of possible combinations, hundreds of trillions. And so we're going to show you the top 10, right? So what I can do is I can kind of drag this down a little bit, and you'll see is I can click on these and it'll show me combining all these bots together. And what you'll notice, here's a good kind of cross section, is what this is showing me on the left, on the right is my equity curve. And this is going back to January of 2022, January 2022. So basically 4.5 years, right? 4.5 years. How well would this combination have worked going back 4.5 years? So we're not just jumping into a funded account and seeing how well it works today live. We're actually doing some simulations and we're saying how well this would have worked. Now we'll show you in a minute kind of how all this plays out, but this shows you 182,000 with 1,900 of drawdown. And what this is showing you is here's the bots. All of our bots have specific numbers. You remember there was 550 of them total, 550. And so that's where we are now. Our system allows you to update and download the latest, like our program, you can download the latest updates all the time whenever you want as a member. And so here's what I'm going to show you. Here's the name of the strategy. And this is saying it's a breakout, a trend following. Here's the net profit. Here is the type. So it's trading RB, YM, GF, right? So these are the different assets. Okay. And all of these assets like MGC is micro gold. All these tickers are different things that are allowed to be traded in your funded account program. Okay. So again, every single one of these is a combination of how many, anywhere from 4 to 10, and this is showing me a bunch of different options, like the top 10 options, okay? If you're like, you know what, I kind of like this one, let's roll with this one, and let's run this through an actual simulator, and let's see how well this would have performed if we were to run this in a fund account. So I'm going to say send to analyzer, and you'll see here that we have this funded account tool here, and it's showing that we have a 98.2% pass rate. Now, would you guys agree that that's pretty good? 98.2% pass rate. What does that mean? Well, I'm telling it I have 5 accounts at a time, which is Lucid. If I want to say Apex, I would move this up to 20 accounts and run the simulation again. And you'll see all of these funded accounts pass, and then the current ones in progress. So what you probably have noticed is, hey, Matt, why does 56 and then 10 fail? How does that add up to 55? And the answer is there's one that still would be partially funded at the end of our simulation, meaning basically that you'll see here that this one right here is still in progress. Now, again, what we've been looking at is our builder and our analyzer tools, and you could run this on a multiple accounts, multiple portfolios. And so if I said, hey, I like this, I'm going to save this. We'll save it as let's say number 22, and then I'm going to go into my saved. I'm going to say, you know what, I'm going to rename this kind of the conservative portfolio. Now you remember we were looking at conservative was anywhere from $100 to $250 of risk, right? Now let's go build another one. Let's clear all this out. Let's build another one, another portfolio, and let's use more aggressive risk, right? Let's take a look at something like $500 to $1,000 of risk, and what we're going to do is we're going to basically, I guess, almost 5x our 2 to 5x our risk. per trade, meaning we're going to get very, very aggressive. And let's see what that pass rate looks like when, oops, this is saying none. What did I do wrong? Oh, we have to allow for more aggressive drawdown. There we go. See if that can build up something. We have to allow for more aggressive drawdown when we are super, super aggressive, right? We have to allow for more leeway. Now, you guys will remember that it does allow for the funded account for 50,000 only allows for $2,000 of drawdown, right? But when we're super, super aggressive, what it's telling us is that there's nothing that kind of stays in those guidelines. So we have to kind of up our risk a bit. We have to be a little more, we have to be a lot more aggressive. So we'll see what happens here, what it shows us. There we go. So you'll see where this also says this meets all of our criteria. And as we look through this, we can look at what the assets are. Again, these are the instruments. So NQ meaning the NASDAQ futures contract. So this would be considered the mini or the E-mini. You guys are familiar with that. M and Q, of course, if you see the M in front of that means micro. And so what we're able to do is we have you'll see that we have 3,900 of drawdown, how much we would have made over 4.5 years, but our average monthly is a little bit different, but our win rate is kind of about the same. And you'll see that it's taken, this portfolio only has, 5 bots. The last one we looked at had close to 10. So we probably had almost double the trades between the two. And then you got some other stats here, okay? So let's take a look at this one. Let's do let's do this. Let's see. Let's go to send to analyzer. Here we go. And let's run the simulation. And you'll see that my pass rate goes down quite a bit to 59.7. Now let's take a look at like what does this look like? What are the stats, the analytics? What are the expectations? What can I like set myself up to, like most people think, oh, it's software, it should always win. This does not predict the future. I wish we could figure that out. Maybe one day we'll all have those Elon Musk brain implants and we'll be predicting the future. But for now, we're here now. And this shows your average win. Remember, we're risking between 500 to 1,000. But we typically have like a 1 to 2.5 or $1 to $3 risk reward scenario, which means we're going to risk $1 to make $2.50, or we're going to risk $1 to make $3, right? So even with those odds, you can have a lower win rate and still be fairly profitable. Is this making sense? Questions on that so far? So this will show our average losing day, winning day, streaks, all the things, right? And so what we do, people ask, hey, how long do I run a portfolio? When do I know to pause it, or if it's not working anymore? Because what we're doing is this idea of data-driven decision-making. We're going back, making decisions. We're making smart decisions based on probabilities, knowing that there is a high probability that we would win over time, not necessarily every time. So we like to say that we can win. We don't have to win every time. We have to win over time. There's two very, very different things. If you jump into a trading room for a week and you have 2 losses and you're like, oh, this is a scam, you're not in it long enough to really see the wins, right? That's what most people, they want to treat trading like a literal casino, like an ATM machine. I click the button, the on button, out comes money. This is not an ATM machine, okay? So the other thing I want to show you real quick is you'll see here, like, what are your maximum consecutive losses? Can you stomach 8 losing trades in a row? That's what this is telling you has happened. That's the worst case scenario. And these are what we use and refer to as guardrails. So they're basically like, what are the boundaries? Like, what are the ranges of when we should and shouldn't stop trading? In our live tracker, we'll actually show you that. Again, that the live tracker and the bots themselves are not included in the free trial. It is, we'll talk about the options if you're interested in kind of following and getting into the live trading, the trading bots themselves. But again, the free trial includes the builder, the analyzer, and the market pulse. And I guess it does include saved portfolios. It does not include the live tracker. Why doesn't it include the live tracker? Well, the live tracker tracks the actual live trades. And if the bots aren't included, the live tracker you're going to track 0 trades essentially, right? So it's not included. So here's what I want you guys to see again is if I go back into my, analyzer, here we go. I'm going to save this as, we'll call this 23, and we'll rename this the aggressive. Actually, I'll call it aggressive 3 since I already have a couple other aggressives. Let's delete this one and delete this one. There we go. So now that I have two versions here, I have an aggressive, oops. Sorry guys, my eyes are a little blurry today. So now I can go back and look at how well has this performed, like what does this look like? And the cool part is I can now look at, now that I have a portfolio that I like and I figured out, it shows me these are the bot numbers that I just then go into NinjaTrader and activate these bots. That's essentially it. There's templates you pick. You say, I want to trade the Mega Orb, and it's template number 368. This shows you how well it's performed over time. Each one of these months, each one of these columns represents a month. So how well things have worked. And you'll see that the worst case scenarios are down here, kind of already happened. And so these are the goals. These are what we're looking at for us to decide, hey, this portfolio isn't performing as expected, right? Again, the software itself is not only making wins and losses, it's also helping you make decisions on whether you should continue. And all that's part of the live tracker. So this shows you, it's got 14 pages, 1,300 trades in this example. And it shows you like how much you made on month 1, month 2. There's some months that you make some that you lose some, of course. Diversification, it's showing you how well across different asset classes, different times, how well things work. It does this portfolio funded account simulator. We'll skip over cash accounts, but if you have an actual account like NinjaTrader, the broker. So we've been talking about NinjaTrader, the software, but there's also NinjaTrader, the broker. We have all kinds of tools built in here for you to use. But one of the coolest things here is the portfolio report card. So I actually have OpenAI, ChatGPT, looking at and connected to my account here. And it's going to tell us this report card in a second, but you'll see that the profit factor, the win rate, all of these are very, very healthy. This is a very decent, good, option for us. There's a few things I would double check before going live, but it's giving me this grade. So most of you guys are probably familiar with grades in school. Maybe that's a traumatic moment for you. I know I very much disliked high school, but it tells you all things about your best, worst performance, context, all kinds of things related to this exact portfolio that we built. Again, what we've been talking about is the software tool that we developed that lives outside of NinjaTrader, and it basically helps you with planning tools. Now I can ask the portfolio assistant here. I'm a little bit limited on time. I need to wrap up, but I can ask it tons of questions about this, or like what recommendations, what changes they would recommend. For time's sake, I'm just going to skip over some of that now. But I wanted to see before I left this screen, do you guys have any questions? I see quite a few people in here. Tracy, Joshua, Jackie, Marius. Do you guys have any questions? Is this making sense? So someone said, trading is easy, but the discipline is hard. Yeah, absolutely. If it was easy, everyone would do it, right? And that's, you kind of don't want easy if that's the case. Okay. Throw any question you have into chat and we'll go from there. Okay. So let's finish up. What's the easiest way to get funded? And again, there's 5 pieces to this. It's kind of the high level topic today. And what we'll do, number 1 is choosing the right prop firm. That is critical. You have to know the right prop firm. So make sure if you're using Top Step, again, they no longer support NinjaTrader. So if you want to use our system, you have to have an account other than that. The rule is if it works with NinjaTrader, then it works with our system. Okay. There we go. You build a portfolio. How do I build a portfolio? Well, we actually just ran through 2 examples of conservative risk, kind of low risk, and high risk, kind of an aggressive posture. Like, how does that work? And so we walk through some of those examples of how that is done. It's pretty simple to set up. And then also you can, once you build a portfolio, or in our case, two different ones, we looked at the aggressive portfolio has a lower pass rate. It can get fast, can pass much faster, but it's a little bit more aggressive and it may blow up and you have to start all over, which is fine if you're okay with that. The guardrails help you kind of decide what your expectations should be. So as we looked at, I think it said 7 or 8 losing trades in a row. You have to make sure you're okay with that and then deploy the bots and stay out of the way. So what does that mean by stay out of the way? Well, you'd be surprised how tempting it is to watch the bots take trades, get into trades, and a human still tries to manually intervene, try to tighten things up, and you interfere with the bots because when you're manually intervening, you're introducing a new variable that didn't exist, right? When we're running our simulations over 4.5 years, that didn't exist over 4.5 years, and now you're introducing like an outside variable that dramatically changes the outcomes. Okay, so again, what is high risk? What is low risk? Typically, what I like to say is if we're talking about a $50,000 account, $2,000 we're using low risk. 5% of 2,000 is $100 per trade. If we're talking about high risk, 20% typically, 20. I should have said 20% plus is 400 plus per trade, and then somewhere in the moderate is about 10%. So 10% meaning I can have up to 10 losing trades. High risk here, I can have up to 5 losing trades, and over here I can have up to 20 losing trades. Does that make sense? So 20, 10, and 5 losing trades. And the idea here is, again, you want to give it room to work. You don't want one trade to win or a lot to lose or blow up, because that's kind of crazy to like bet it all on black, at the casino. So just as a recap, you guys probably know this, but what do prop firms actually want? Most people think they want the most profitable trader. And that is incorrect. What they want are most disciplined and consistent traders. So I'm curious, for those of you who are still here, what is the biggest challenge that you guys have? What is the biggest issue you have when it comes to trading? Is it the consistency, the discipline? Because we can absolutely help you with that. That is one of the many problems that we can solve with automation. So things like staying inside of your limits, your drawdown, your right, all that, and then hitting the profit target consistently and being consistent across multiple days. You're not having some huge one home run on one day and a bunch of little wins or losses the rest. Again, it's consistency over time. And believe it or not, passing is a game of discipline. It's not a profit game. So what's interesting is watching what most people do when they get an account. Once they pass an evaluation, they run one account and they cap their potential, which is kind of crazy because there's most of them offer anywhere from 5 to 28 different accounts simultaneously, and you can have that's one prop firm. You can have multiple prop firms. And what most smart traders, what we're seeing is the one account is a proof of concept. And we actually have a trade copier in our community where you can basically copy one, like one trade can go into 20 different accounts, right? And you can mimic, kind of set up a portfolio and then copy that into multiple accounts. You can actually run multiple portfolios with multiple copies too. It's pretty cool. But the trade copier is how you actually scale into like bigger payouts and with more accounts. That's basically it. So the question is, where do I go from here? We've been talking about right now is the free trial, 14-day trial. We'll go ahead and throw that into chat if it's not there already. Yep. Yeah. Which prop firm do we recommend? Yeah, I'm a personal fan of Lucid, but I will never give Apex any more of my money. But this is an option for free trial 14 days. Basically what we looked at today, the builder and the analyzer, right? That's the main tool. It does not include the live bots are over here. If you want to test drive everything for 30 days, it's basically $199. Sorry, I misspoke. If you want to test drive not everything, but the live trading bots for 30 days, it's basically $199. And then when you're ready, you can start scaling and go up to our full membership where we offer the trade copier and community. We have community access where you can meet with other traders as well. We actually just literally yesterday finished our live Nashville trading event here live in Nashville, Tennessee. Ran out some hotel space, met up with some of our traders in person, got to kind of screen share and chat and strategize. Super fun. And so that is something you guys can, if you're interested in joining, is like the virtual version of that, where we have a community of other traders. So, ladies and gentlemen, that's what I have for you guys. Please let me know what your questions are. If you're watching the recording here, this is my email, matt@pushbuttontrading.co. Again, my name is Matt DeLong, and I will hang out for a few minutes to see what questions you have. Let's see. Can the strategy builder analyze for a cash account? Yes, it can. Yeah, I did not go over the simulator as well, but yeah, it absolutely can. So things like pass rate and all that doesn't apply. There's no like maximum drawdowns for cash accounts. But if you're down 2,000, it's an actual 2,000. So yeah, absolutely. Yeah. So at a minimum, I think you guys can try out the free trial. How do you get the trade copier, Joshua? We really just give it away in our full membership. Yeah. Um, our premium membership. Yeah. Good question. Yeah, and actually, believe it or not, we're actually hopefully within the next 2 weeks, we actually have a brand new state of the art rebuilt from scratch trade copier. The other one I think we've had around about a year and a half. We rebuilt it from scratch, and it kind of works outside of NinjaTrader, and so it, hopefully we'll have the final testing finished up in the next week or two. But any updates to our community, we don't charge anything extra for any of the new tools, including this bot portfolio builder. And we basically rebuilt all this, and we went live with it in March, so just a few months. So, yep, we had an older version of similar type of thing. Yep. Uh, Can the 14-day trial work on a Lucid Prop firm account? No, because remember the free trial. Let me go back to that slide. The free trial um, does not, the live bots that you're asking about is only available in the workshop. Yep. So the free trial, we don't give you access to the trading bots in the free trial. And there's several reasons for that. One is because people take up a lot of our time asking questions and can you help me? And all of that takes a lot of our resources. And we're a little bit selective on what we want to offer for free. And like free is kind of like it's kind of like self-supported. You can email us questions and we'll help you. But there's no like, do this for me. We actually have people asking us, can you come to my house and install this on my computer for me? It's like, this is a free trial. Like we're giving this away for free. Please don't like drain my support resources on something that is free. If you want more help and all that, that's kind of where the 30-day workshop is, including the live trading bots. Yeah. Yep. So, what other questions you have? And we've also seen people that have tried to use, like we used to offer one bot in as a free trial for 14 days, but people wouldn't even install it. So then they say it didn't work for me. I'm like, if you never turned it on, then 100% chance it did not work for you, which is pretty wild. Yeah. Yep. How can I be sure it works when the trial version will not work on a live account? It's not that you have a trial version of the bots, Josh. We don't offer the live bots for free. They're $199. So think of it like I guess you want to think of it like a $199 trial. I guess that's how you can think about it. Because a lot of downloading and setting up the technology, there's lots of questions. People like, where's the on-off button? This is, some technology. It's got some pieces to it and some things you have to understand. Yep. We're trialing the planning tool. Yep. How long did the conservative strategy take to pass? Jackie, I think if I remember, it said anywhere from 22 to 48 days, I believe, is what we were just looking at. Yep. Now, obviously, that's two portfolios, and there's hundreds of millions of possible combinations. So it really depends on what your inputs are, how aggressive you want to be. You can speed it up, slow it down, just using our examples. So, yep. Yeah. And again, you're not, Josh, you're not the live bots are over here. right? And the reason we don't do this is because this sometimes requires quite a bit of support, right? And you guys are like, well, if I, want to buy a car, I need to test drive the car. Yes. But if something requires a lot of support and a lot of hand holding and stuff like that, in case there's questions, then that's where it's like, we can't like feasibly offer all of that for free. Especially when people say, hey, I only want to join if I get funded in 2 weeks or get a payout in 2 weeks, right? It's like, I only want to pay for a lottery ticket if it wins. I don't want to pay for a lottery ticket unless it wins. It's like, I wish it was that simple. Yeah. What other questions you guys have? Anything else, Matt at pushbuttontrading.co. But I am at my time here. Any final thoughts, please let us know. And we will go ahead and share this recording here shortly. Cool. All right. Thanks so much. Thanks for hanging out with us and have yourself a good